Good morning, everyone. Going live. Good morning, Delphine. How are you this morning? Thank you. Nice. Thanks for the sound check. All right. Good morning, everyone. It's Wednesday, June 17th, 2026. New day, fresh start. Welcome to Pitbull Traders Morning Game Plan. I'm Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable trade setups, all with the focus on building real trading skills and the mindset designed to drive consistent profitability. Every morning we come in with the same goal: build out the structure before the open so that we're operating in alignment with the day's dominant forces. Not guessing, not chasing. All right, team, we have a really exciting day ahead of us. Today is big FOMC day. Yeah, so as we know, there's going to be fireworks at 2 p.m. Always exciting. Me and the team are discussing possibly having a special 2 p.m. Fed rate decision session, so stay tuned for more on that. But for now, we got a little bit of a late start, so we're going to jump right on into it, okay? We're going to jump into our most bullish scenario, our most bearish scenario. We'll get through that, and then we'll just narrate the market in a live fashion. All right, we're going to start off with our 15-minute time frame. We're going to build out the most bearish scenario, the most bullish scenario, the most bearish scenario, and then we'll talk about our beloved trap trades. Thinkorswim is running slow this morning. Had a problem getting the front month contract data loaded. All right, let's start off on the right-hand chart. While that chart loads, let's maximize this. Let's talk about the most bullish scenario. All right, team, so coming in, immediately we can see that because we closed yesterday on the low, 95% of our volume has been above the settlement. All right, so that makes, even though we are it looks like we're in a downtrend, the overnight inventory is technically long, although that has paired off quite a bit. All right, so for the opening, we're going to monitor the overnight high. Let's just get that in here correctly. All right, so our overnight high is 76.12. All right, it's interesting that comes into right at this peak, which was our rally high. Now, I think that this rally high is going to be really important because so far what we're seeing is, and I've seen this pattern play out before. We've made our high of the week thus far was on Monday, really in the early morning session. So more on that in a moment. All right, but our most bullish scenario has us rallying above. Quite a bit of ground to cover, but we'd have to get over the overnight high at 76.12. Perhaps we get a pullback in to test this distribution here, right? So we kept bumping our heads up against 76.07 to 76.05. We'll call it 76.05 to 76.10. All right, so we could get a pullback even as deep as 76.05, 76.10. Maybe we're bullish, we're really squeezing, and we only get 76.12. But at that point, we're back into yesterday's value area. And so we know typically the rule of thumb is if we're back in the value area, we're going to traverse the value area, and we would be targeting value area high at 76.23. All right. So anything we get, any price action we get that breaches the overnight high and holds a pullback to 76.05, we're thinking longs, we're entering long trades. We're trying to get in as close to that 76.05, 76.10 exit sign and looking for a move higher to value area high at 76.23. Perhaps we even get up to yesterday's high, 76.36. We'll monitor the trade for continuation. We'll monitor it for momentum. We'll see what the market is offering. All right. Good morning, Adrian. Good morning. Yeah, you see, Thinkorswim is still lagging. All right, so no worries. We'll just adapt. We're traders. That's what we do. We adapt to the market in front of us. All right, so team, while we're on this chart, let's talk about the bullish trap trade. All right, so the bullish trap trade has us coming up over the overnight high. And again, much like yesterday, remember, we saw that same move, right? So look, focus in on that look, right? Although we spent an hour trying to eclipse the overnight high, all we did was put in 1, 2, 3, 4 wicks. The price ultimately broke in the back half of that hour. That's the stall of momentum we were looking for. If you recall on Monday, I was trying to execute that same idea into these large wicks. Okay, but what I want you to focus on is what that pattern looks like when price is stalling, because it could be there for an hour as it was yesterday and still just unable to gain that momentum. Remember what that looks like, all right? Because we don't want to jump the gun and get into a trade on one of these wicks and immediately be down 2 or 3 or 4 points and not have the move. So let's wait for confirmation. We want closes above the overnight high, right? We want to see a close up there. We want to see price demonstrate that acceptance. Okay, once we get that acceptance, then we're stalking for a pullback. Then we're waiting patiently. We're stalking for an entry. We're going to use the order flow. We're going to enter a negative delta. We're going to use the ticks to try to fine tune our entry. Okay, so if we get that pullback and if we get the look above the overnight high and we start to stall out, it could materialize over the course of an hour or so. We saw that yesterday, but ultimately price fades and gets back below the overnight low. At that point, we're going to wait for a break of structure, but what we're going to look for is the move lower, and we're going to be targeting first that 76.05 that we were looking for on a pullback. We want that overnight high to hold as resistance, and we're scalping short into value area low at 75.98, 7600, okay, and then maybe even a move down to a true gap fill at the settlement 75.87. Okay, so that frames out the most bullish scenario. It also frames out the bullish trap trade. Let's talk about the bearish scenario and the bearish trap trade. This happens to be one of my favorite. Okay, so look, on the bearish trap trade, it's pretty simple because we have the settlement at 75.87, yesterday's low at 75.81, as well as the overnight low at 75, just below that at 75.81. This was in the runoff. It was between this was the 415 close. Okay, so the overnight low and yesterday's regular trading hours low are both 71.81.25. So the most bearish scenario has price selling off in quick fashion, getting below, and then any retracement of that move lower fails to reclaim the settlement, and we get that weakness. Again, that same topping type look with wicks. We're looking to enter short trades that get us down into below the overnight low, and then we're monitoring for continuation below there. All right. We have some other supports below 75.70. We'll look to the market blueprint. I'm going to look to my trade plan. I suggest that you all do the same thing. If you're not using that market blueprint, just look at your trade plan, see what you have as support underneath there, because you're going to be in a trade. You're going to be in a short trade. You want to know where you're going to run into trouble on that trade. Okay. All right. So let's talk about the bearish trap trade. Bearish trap trade has us moving lower. Okay. Since these two prices are in such close fashion, right? We have the overnight low, yesterday's low, 75.81 quarter, as well as the settlement at 75.87. It gives us an excellent band in order to monitor for any reclaim. Okay, if we start to push lower, but price is unable to really extend lower, we know that when the ES sells, it sells quickly. It's going to move fast. Okay, but if we were stalling out and we're consolidating, then we're waiting for a close back above the overnight low for our first signal. We want to see price get through the settlement. Okay, if price fades off the settlement on its first touch, but ultimately is unable to get back below the overnight low, okay, that's going to be a signal for us. We're going to start looking for long scalps, long entries that get us into a move up to value area low at 75.98.75. All right, that could even materialize as a look below. Maybe we put in a higher low, ultimately reclaim. Maybe we hit the settlement, bounce off, but ultimately move higher. All right, so that's going to cover our bearish trap trade. strong feeling that we're going to have one of these materialize today. And then going into the afternoon, there's our opening bell. All right, team, let's get that opening print down so we can use that as a fulcrum. Remember, every day we come in and we use our day time frame references, right? So we're going to use our opening print. Today, that is 75, 95, 75. Okay, so we're going to use that opening print as kind of like a fulcrum for the rest of the day to see, all right, are we trading below it? Are we trading above it? What's the market intention? All right, the idea there is to imagine what is the daily print going to, what is the daily candle going to be like? Is it going to be a green candle or is it going to be a red candle? All right. And our overnight inventory is another tool that we use to gauge the first move off the open. Thus far, we can see that we're moving a little bit lower and our overnight inventory was 95% long. Now, there's one thing I do want to discuss is about this. So we had the gap up on Sunday, right? And just going through that here, the gap up on Sunday had us moving higher and we had the initial morning rally. Since then, we've done nothing but move sideways to lower. All right. So, and if I recall correctly, this last move after 10:30 was a news bump. And so I just want to be mindful of it because I'm worried. I'm concerned that typically what you see is that the higher the low of the day has a high probability of forming within that first hour. And what I'm looking at is our inability to retest this high. Yesterday, we couldn't gain any traction above the overnight high. So thus far, we have weak hands long from Sunday's overnight session. We had the rally higher in the morning. Since then, there has been a lack of buying. All right. So one thing that's pointing that I'm looking at is maybe this has a probability thus far of being the high of the week. All right. I'm anticipating, with that being said, the lack of buying, the lack of strength in this market, us being in a positive GEX environment. I know the supports are going to be bought. However, we're failing to extend above highs. That smells to me like distribution. Okay. Every time we come into a high, market makers are selling, they're taking profits off their long positions. They're supporting the market on dips so that they can get better fills on pops to exit their positions. Okay. So let's monitor that. I am anticipating that this gap will fill this week. And what would change that for me, where I'm wrong on that, would be, okay, so the first thing I wanted to monitor, just reviewing this quickly, is this low right here. Our pullback low from Sunday night was 75.46. Okay, that's going to be a tell for me on the market blueprint. I'm getting short underneath there at 75.50 for a move down to the gap fill at 7,500. Okay, I'm just seeing a lack of interest, a lack of buying here, and nothing but lower highs, lower highs, lower highs. Where I'm wrong on that idea is on a move. It's pretty simple. If we get a move above yesterday's high, 76.36, then I'm wrong. But while we're trading within this range, I'm looking for a lower high, an hourly lower high. See, this chart never loaded. Not sure what's going on here. But let's just frame this out here on the hourly. Okay. I think we're going to be able to see it a little bit more clearly if we zone into a 60-minute. Yeah, the aspect ratio on this, but thus far, we gap up from Sunday. The Monday morning buying, distribution. All right. Again, where that changes for me is under that, I'm monitoring that 74.546 pullback low as a confirmation, right? That's this low here. Also, we can use this 75. We can use yesterday's regular trading hours. That one out. All right. All right. There any questions on that? Let me know. All right. We just came down, tested 75.84, and price is rallying with the potential for a higher low. Right? Could materialize at 2 o'clock. That trade could materialize in the morning session, could materialize in the afternoon session. Taking a look at the high here at 75.96. All right. That is exactly one tick above our open. The Russell is rallying. Oh, so we have a bit of bifurcation here, right? In that the Russell is rallying above its overnight high, and the Nasdaq is weak. Okay, there's the VIX is rallying, and our ticks are not lending much information. So let's keep an eye on the VIX too today, because ahead of the Fed, we just want to be. We just want to have one eye on that for sure. And the VIX seems to be moving up above 16. Our internals are 1-to-1 positive on the NYSE, 1.6-to-1 positive on the NASDAQ. Yesterday was a pretty choppy session, but we tilted lower, right? And all day long, admittedly, I was pretty frustrated with the day, because I got long the lunch low, and I got a couple of scales out of it, but ultimately it didn't go anywhere. And then that's when the light bulb moment went off for me. One of the characteristics of an S3L lunch low day is that you want to see the previous pivot high overtaken to sustain the trend. More on that when we do the workshop on the clock. That's coming up on Friday. So thus far, we opened 75, 95, 75, and it's been one tick, and we've been selling. So yeah, we just want to stay alert here. Good morning to everyone checking in on YouTube and socials. Good morning. I'm Manny, Pitbull Traders here. We're monitoring the ES. We look like we're getting some weakness here, testing the overnight low. Perhaps we get our bullish trap, our bearish trap trade. Let's see what materializes here. Our overnight low is coming in at 75.81 quarter. All right. Be careful in this zone, as price can just rip right back up to highs while it gets underway. It looks like the lower high is maintaining. However, the condition of the overnight inventory, one of the things that market profile traders pay attention to is the overnight inventory. The overnight inventory tells us whether traders were net buyers or net sellers during the overnight session. So if he has closed at let's say he has closed at 7,000 and it opens at 7,050, the overnight inventory is likely net long. Okay. If he has closed at 7,000 and we open up at 74.50, the overnight inventory is likely net short. This is where market profile comes in. The market constantly seeks balance. When the overnight inventory becomes heavily skewed in one direction, too many longs or too many shorts, the market often tries to correct it during the regular trading hours and come back into balance. Long inventory can lead to selling. Many traders see a strong overnight rally and assume bullish. Not always. If overnight traders are excessively long, those traders become potential sellers. Just think about it like this. Today's buyers can become tomorrow's sellers, or last night's buyers can become this morning's sellers. The short inventory can fuel rallies. In an uptrend, overnight weakness is often the sign of a good setup, a good long setup, because we're in an uptrend and we'll have that additional fuel to continue that uptrend. Okay, so weak overnight action in an uptrend creates a short inventory. If the regular trading hours session opens strong, those shorts become fuel. Now you can also use that with value. This is where the market profile ties everything together. Is the overnight inventory long or short? Are we opening up inside of value or outside of value? Are we opening up above value or below value? So in an uptrend, if the overnight inventory is short and we're opening up below value, market profile teaches us that a rally is more probable to bring price back into balance, as well as correct that overnight inventory condition. Conversely, if you have a strong open, but you're inside of value, or say you have short inventory, but you're opening inside of value, the potential inventory correction may not be as strong as if you're opening up below value. If you have a strong open outside of value, inventory might not matter that much. Now you're just looking for whether price is accepting or rejecting. So just look at it. I'd like for you to look at it like this. Overnight inventory is not a signal. Overnight inventory, it's the context for the first few hours, I would say for the morning session of the regular trading hours day. Overnight inventory tells us who's trapped. And just keeping in mind like this, to last night's buyers become this morning's sellers, or last night's sellers become this morning's buyers. The market profile concepts are an excellent tool, and I suggest that everyone familiarize themselves. Let me know if you could just drop a comment in the chat. Let me know if you are familiar with market profile concepts, if this is new to you. Let me know what you feel your understanding of the topic is. It is something that I use. It comes second nature to me. I've been using market profile for a while, and it's one of the main tools that I use to frame my understanding of the day ahead, as well as the context, as well as how I want to position within the auction. Now, remember, when it comes to market profile, so value is always dynamic, right? Value is always, it's not static. Most traders, draw value area high, value area low, and the volume point of control. The volume point of control is where a majority of the prior day's volume transacted. Just as a rule of thumb, the volume point of control is an area where you more than likely want to be exiting your position, not initiating. And if you are, understand that it's going to price may stick around there. The volume point of control acts as a magnet. Most traders draw the value area high, value area low, the volume point of control. That's not the real lesson. Value is constantly moving. The important question is, where is value, and where is value likely to develop based upon the current price action? Again, another reason why I stated the potential for a gap fill, right? So we've had lower value following Monday's spike high. We've had lower value in Tuesday's session, and most of Monday's session's value was in the first part of the day. So I hope that helps frame out a little bit of how to apply market profile concepts. And then remember, value is always migrating in the current session. In strong rallies, value will keep migrating higher. Buyers are accepting higher prices, higher value. That's bullish. I'm just monitoring this pullback here to 75.95, as this was one of the scenarios that we outlined in the pre-market prep. Now I want to go back and I want to reference my trade plan to make sure that if I do initiate any trade from this area, is it in alignment with my trade plan? So immediately for me, I'm looking at my continuation long, 76.03, okay? And that would be an area of a valid trade for me. I'm also looking for time alignment, and it being roughly 10 minutes to 10 a.m. I'm still ahead of my anticipated window. So yeah, for me, the trade makes sense. Again, always ask yourself, does this trade make sense for me? Is it in alignment with my plan? Now, this trade, while it is a daytime frame trade using daytime frame structure, here's a nuanced question. Is it in alignment with the market profile concept that we just discussed? Is it in alignment with yesterday's lower value? It's not correct, right? So immediately I want to use that information to frame how I manage the trade. So if I do enter in a long trade, I want to be a little bit more judicious and manage my expectations on how far that trade might traverse. I want to make sure that I manage my expectations really well, really tightly. I have not entered that pullback yet. I'm just monitoring for uh, monitoring the order flow, and I'm seeing that we're just chopping around a little bit here during the thick part of the overnight distribution. I almost did pull the trigger there at 75.95, and we just immediately just traded right down to like where we are now. So let's see if we can just reclaim that area and start to move back up. So price is coming and testing the volume point of control, our developing volume point of control, right? Okay. So now I'm going back above it. I'm good on my window. Let's try the trade. I don't want to see price get below 75.9150. My first scale is 5 points at 75.9950 with another scale just above that. Now, being that I understand that we're challenged by value here, I want to be a little bit more, I want to scale a little bit heavier up front on this trade with the understanding that maybe we won't get that as high as I would expect if we had continuing developing value, if we were in a strong bullish uptrend. So I'm just trying to manage the trade in line with my early morning analysis and blending the context of the day with it. Remember, when it comes to value, right? The location of value matters, but the direction of value matters more. You can see here that we're showing some weakness, but we're coming back down to test that 75.93. We're now back below that entry point. It's kind of in line, right, with the thinking that, hey, we're stalling, right? Kind of like what we saw yesterday, where prices getting higher into testing local highs and just stalling out. Now, I'm still not going to cut the trade. I'm going to monitor it very closely, but I'm also maintaining that idea in my mind of the current context. Trying to stay flexible with the market, but also understanding that we may need to cut this a little bit earlier. -2 on that one. I just took it off. I closed it out. We're back below 91.50, so I'm going to go ahead and take a graceful exit on that one. Price just stalled out on me. Looking for that break and that bump above, it just never materialized. And it could happen. Another thing that we have to consider here is also that we may be in for a more choppy type morning session as the market awaits the FOMC. I don't really like that high for a potential high of the day. This might be a trade that you have to take twice. But again, given the context, right, that I outlined earlier, I'm less hesitant. If the market was going to expand on that overnight inventory, that was a great opportunity for it to do it, right? It was a good opportunity. It was unable to get over and make a meaningful high even above the overnight session high. So now what we have to consider is that overnight inventory correction may be upon us, and that high may be it for the morning session. You might want to consider looking at the most bearish scenario trade we outlined in the pre-market. Either which way, so I'm looking for better structure here, right? If we are going to get that most bearish scenario type of trade, I want to get a little bit better structure. I want to wait for a break of this current little swing low, or at least for a close of this candle bar. Okay, I've got the close. Oh, sorry, that's a tick chart. So yeah, so pretty good scenario here that we're going to correct that overnight inventory. If you're in your short trade, you're monitoring for continuation, you're targeting that overnight low. If you're on the sidelines, then you're waiting for a break below. We're looking for strength and momentum of the move to then maybe scalp momentum short. Are there any questions on anything that I've gone over in the morning? Let me know if you have any questions. Please shoot them out. All right, so we've just looked below the overnight low. Be cautious here if you're in any short trade, right? If you're sidelined like me, you're waiting for better structure. You're looking for what's going to happen here. Are we going to get a look below and fail the overnight low? Was this just an inventory correction move and now the price is going to move higher, or are we going to continue lower, right? Decision point. This is when it's really good to go back to your trade plan. Reference your trade plan. Am I out of support? What did I outline? What did I think should happen in this area? And do I want to act? The NASDAQ is in much the same state as the ES. Yeah. So now that we entered that high window, right? So remember, E-mini sniper, price comes first. Always price first, right? And then we apply time. So right now, it looks more to me. So what I'm looking to understand here is, would this move lower of the overnight inventory, or is this, and we're going to move higher, or is this the most bearish scenario we outlined, going to move lower? This is definitely a decision, and it's muddy for me a bit because my trade plan has me getting long at 75, and I'm, per my rules, I can, if a level comes within 5 points of my, hang on, I'm going to click these here. I'm going to buy these. All right, so I'm long here. Let me manage this. Hang on. I'll go into that in a moment. Get the account up. So, sniper, since we're in the front, so we just entered the window at 10 a.m., right? 4 minutes ago. Theoretically, I don't want to be long, but look, if price is looking to, I'm not looking for a low pivot just yet. What you would want to do is wait. If you're looking to trade, I'm looking to still trade into that high, because I just, like, it's in that gray area, right? Where we just entered the window. I typically don't want to get long as I enter a window. However, we just looked below the overnight low, reclaimed it, and then price, I also have a support that I came to within 3 points of touching. So on this long, I'm definitely not looking for a strong move higher, although I'm willing to accept that if it does. However, I think that we hit that. I'm going to get stopped out of it now, I think it looks like, but the low looks good. We have a taper here. Yeah, I may be on the wrong side of it. But we have, so I have 75 on my plan. I have 75 to 75.73, and we traded a low of 75.78. The overnight low was 75.81 quarter. We looked below it. We had a 6-tick taper down there, and then we immediately claimed it. Now reclaimed the overnight low, and now we're back above it. So I have a support, and I'm looking at price first, using price as my guide, and then I'm going to time. So am I good on time? Can I reasonably enter a trade and expect a high pivot? And with this current structure, us being at the lower part of this recent distribution, I'm more inclined to expect a there's two ways it can materialize. I'm more expecting a lower high. Say we come in and we do something like this, right? Let me just draw that a little bit better. And then we come back down, sure. Or we could come down and then put in the lower high here, right? Where the arrow, where this is my AM high or this is my AM high. But I'm using price first. Does that make sense? One of the nuances that I want to explain to everyone, especially when it comes to the execution clock, is it's a common mistake that I've seen often, that you start to focus too heavily on the time, right? Use price first, right? So if I had to weight it, I say that price is 75 to 80% of my decision making. 75 to 80%. I'm looking at the structure. All right, just got that fill, plus 5 points on that one. All right, and now so I got plus 5 on the first. Got plus 5 on the first, and then I add at 87 quarter. I just have my so again, uses support, the reclaimed it, and I got long. The context of this setup is that the overnight inventory was net positive. It was net long. So I'm looking at the move lower, not so much as and as we were trading lower, if we were really bearish, then we would have been, trading 75, 70, 75, 60. But price immediately looked below the overnight low and then started here. At that, again, now here's where I'm using the clock, right? So we're moving higher, and I know that I'm in the window for a high pivot, right? And that explode. Maybe we're high morning where it That's why I tell everyone, join the pit. Join the pit. This week I've been all day. Some, but I'm hanging out in the pit the entire day. If you already know that, really working, trade charts, sharing ideas, the flow, buying it, right? We don't want to look at the clock as more of a. We want to use that as a additive to price action. Okay, cool. Thanks. All right, gotcha. So there's also there are several nuances. The clock is very nuanced in its application because it's a time-based study, and the nature of how price moves. So if we look at it like, okay, I'm hesitant almost to put like the plan has a center time on it. And that is just something that I've used because when I started using it, when it was taught to me by one of my mentors, I needed, like, I still looked at it as I needed a specific time. So I started observing that, from back testing the charts, I started to see that these time frames kept popping up, right? So the AM high it had a higher probability coming around that 1030 mark. But it's best when it's used as a window. And because price, say that the powers that be, right? Say that the market gods are the ones that are forming this high, are saying, hey, okay, at 1030, we're gonna sell the shit out of it. We're going to smack it down, right? If they're doing that, there still might be residual buying. There still might be guys like us who don't know that what they're doing. And although they sold, say, 75, 95, I'm still bidding it up 75, 95 quarter, 75, 95 half, and I'm taking it over that price. They've already sold, they're sitting, waiting with their stop somewhere, wherever it might be, but price tends to overshoot. And so the adage that tops form, bottoms happen comes into mind, right? We have to allow for the structure to build out. We can easily see that here on this chart, right? Okay, so this is an anomaly here, right? That was a top that happened. But every other rollover, right, formed over some time. See how tops happen? Tops form. And what do I have? It tends to have or E-type look to where tops form, bottoms happen. All right, we're getting a move higher. Now we're going to monitor this for continuation, right? So I want to see we had night inventory correction. However, now in squarely the more data points that we can stack in the favor of one trader or another, the better our edge is going to be. Also, a higher probability that the trade will be successful. And even if not, with the understanding that not all trades are going to work, then at least we know we're sticking to a process. We're executing something that makes sense to us. Over time, we understand that when we execute, having an evidence-based approach, following our trade plan, following our process, over time, we will start to begin that confidence, because we know that, hey, my edge dictates that I'm going to win. That if I execute and stick to my process, I should win 6 out of 10 times, 7 out of 10 times. At that point, you're just playing the numbers. You're trying to maximize your gains on those wins, and you're trying to minimize your losses on the losers, because you're going to have losers. The whole game becomes, hey, let's make this loser as small as possible. Let's make the winner as large as possible. And that's trade system optimization. Many traders want to go they want to go straight to mastery. They want to go straight from execution to optimization. They don't want to focus. You have to focus on process on processed execution. Executing from a process and getting really good at executing that process. Then ultimately you reach the point where it just becomes, as I said, it becomes a numbers game. I want to maximize my losses. I want to maximize my gains. I want to minimize my losses. So on those, 10, if I know I'm losing 3 out of 10 trades, and my system tells me that, hey, on my 3 losing trades, I'm losing 5 points on each trade. Can I cut that down to 4? What can I do a little bit better to kind of limit that downside? I think it's more important to limit that downside in your execution than it is to first, because most of us focus on optimizing the upside. But traders that focus more on the risk aspect, the risk component, tend to fare better. So here's a quick observation for us, right? So we breached that high, our current high where we were stuck at 75.98. We breached it. But is the market moving in a strong fashion? We all know that when the ES is bullish, we could have been easily in at least, if we had follow through, our next 5-minute print could have easily printed up here, right? And then maybe we get one of these, and then we get some follow through, right? We could have had this pattern developing. That's not what we're seeing. And we understand that now. We're going back to what we discussed in the pre-market. We're thinking about developing value, how it's been developing lower throughout the week. We also are applying the concept that, hey, since Monday, we've been putting in lower highs. Was this move just a trap? We outlined earlier how with this the area where the lower high could come in. Okay, so they swept the stops and now we're moving lower. All right. So where's the next trade? All right. So let's say it's 10:31. We've got this long bar here, right? We have this 5-minute print that's just 1 minute old, and it's got a high of 75.99 and a low of 75.91. Hey, let's not get chopped up in a 5-minute bar that just started printing and that's already printed an 8-point range, right? Let's let this one build out. We already know that if it was really bullish, we would have maintained above 75.98, 75.95. Let's see what happens. Let's gauge the reaction. If price comes back into 75.95, 75.98, what do we see happening there, right? Let's let this one close out and then start to build out our idea of, okay, if this is going to move lower, where do I want to enter? All right, well, if it's going to move lower, then it shouldn't move back above 75.98, right? So if I can get in close to 75.98, then that pretty much gets me in close to my exit. Three minutes left till this bar closes. So we're printing this bar now, right? What we're looking for next is a retracement bar that gets us up into this zone, right? And then that becomes our entry. Allowing the structure to build out, having this logic chain, forming entering trades that follow a logic chain. All right, this is what makes sense right now based on the evidence. And then making sure that we execute that plan and with no trepidation, execute that plan with confidence, because we understand that not all trades are going to win. But if we stick to that process, we enter trades that have, that follow a logic chain, that are based in evidence, with the best information that we have at the time, then we can feel good about whatever the outcome of the trade is. Okay. At that point, we're just executing as a professional. We're trying to get better at monitoring, at reading the price action, at fine-tuning our execution, becoming a little bit better at our entries, optimizing the system by limiting our losers. If our losers are average of 5 to 6, 7 points, we're trying to optimize that. We're trying to get those losers down to 3 or 4 points. If our average winner is 3 to 5 points, we're trying to optimize that and get that average winner up to 5 to 7 points. Even a tick is like giving yourself a raise. When I first started trading, I for a long time, I had to stay away from the first 15 minutes, half an hour, because when I looked at the statistics, I was just consistently losing at around the open. And I thought about it, hey, if I just stop trading around the open, it's like giving myself a raise. All right, so look, we got the print now, and price seems to be moving pretty decently lower. It looks like we have a higher low in place. We know that the execution clock tells us that we're looking for an AM high. That AM high came in right on time. We had the timely cover up there at 76.0275. Price painted as high as 76.0450, and now we have evidence that tells us, okay, we could be looking at a short trade. So is price going to pull up, test 75.95 to 75.98? Thanks, live action. Is price going to pull up, test 75.95 to 98? Okay. Wait, let me just clear this out. Let me draw that a little bit better. Do we get a test up here for a move lower? Well, I don't think so. It looks like price moving lower, right? But I was looking for something like this. I would have entered around here. Now that's no longer the case. So now I'm looking for extension lower. I'm looking at 75.85 to 90 to 80. And I'm looking for this kind of a move, right? I know that this is my support. I know that I have a support band in this area, 85 to 80. And now what I'm looking for I'm looking for price to close below these areas, right? I don't want to get trapped again. And then I'm looking for pullbacks or retracements into this area for a move lower, with the understanding that, hey, this could materialize from the lower part of this range or from the upper part. You can enter this trade by entering one here. You can add one there if that's a part of your trade plan. Again, you've guys seen, like, I frequently go back to my trade plan. What is my trade plan telling me that I could do in this area? Do I have an area? Is this an area where I can do some business? Is it a time when I can do some business? I know on time I'm good, right? Looking at time, okay, I'm good. I can tell myself that, okay, I'm assuming that this is a high. This is my high. And I'm also looking for a low, okay? So I have a low here. Now, on time, I'm good. Do I have structure? Is price telling me it's go time? Well, I'm looking at us bouncing here. It's not, I need closes below here. I want proof of life, all right? Get down there, get below 75.80, get below 75.85, make it stick. Let somebody else's money figure it out. I'll enter, I'll ride the coattails. Let's get below it. And then I'm asking myself, am I going to run into a support? You're never going to, it's rare that you're going to have everything in alignment. You know, at a certain point, you're going to have to give up one for the other, right? Put the risk on. There are some times where we get everything comes into alignment, and we get fortunate. Those are the easy ones. Those are the easy days. But this is the structure that we're waiting for right now. And now, in order for this portion to happen, in order for me to start looking at this side, okay, let me just frame that out in a different color, right? In order for me to start thinking about this, about entering a short trade, what I need first is I need closes below, right? So I need this part first. So I need the down part first. I need this leg first, all right? And in order for that to happen, I need to look like this. What I don't want to see, I want to see some continuation. I want to see follow through. I want to see closes with little wicks at the bottom, bigger wicks at the top. What I don't want to see is this type of structure. Is a big long wick to the downside and price moving higher. Right? I don't want to see something like this. And if I do get it and I'm in my trade, then I'm managing it accordingly, right? I'm trying to take a quick exit. But I don't want to see this when I get down here. I want to see the right hand look. All right, we're getting this close now back below. It might be go time. Let's monitor here. What time is it? It's 10:40. So this is the start of a new bar. Sorry, just erased that. But I hope you guys caught that. Strength and momentum are here. Do we take a momentum short or not? Let's wait. It is moving pretty quickly. I'll let you know if I do anything. I'm not using that. So let me just make sure I have here. What time is it? It's 10:40. So this bar's got a print. It's got to close. May have to. No, this might be a momentum short. You know, well, we have momentum shorts are great. Momentum trades are great when you have proof of life. You know, you get that first target fairly quickly. It's awesome. So here's where it gets a little bit. So we got to move lower. I am bumping into a market blueprint support, right? But this is a market blueprint support that's already been tested. So what do I do in a scenario like this when I have conflicting signals, right? Price action is telling me one thing, but my trade plan is telling me to do another. Well, at that point, right, I don't have to trade this. Or I have to pick a side. Correct. We're at that support, right, Sniper? So do I want to buy a support coming from a high pivot when my low window hasn't opened yet? I don't have to take this trade. I don't have to participate in it. Nice strong thrusty move off of that support though. Right? Hindsight is 2020. That's a nice thrusty move. So now, right? Okay, so here's the next play, right? Let's talk about what we can do, what I would do now. So now this support is holding. So let's let this build out a little bit, right? If this wick holds, and let's say we put in a higher low into my 11 o'clock window, that's an option. Or do I want to trade it short? Well, if I trade it short here, if I'm getting in here, 75.85, which is my zone of resistance that was support, should now be resistance, and I'm really close to my exit at 75.86. At 75.80 to 75.85. So we're already coming in thrusty into this area, and let's see if it holds its support as resistance. Again, not obligated to trade it. If you don't like the look, you don't have to participate. Or am I going to get, this is one scenario of the market blueprint support, or are we going to get up and a rollover, and then maybe it holds again and we start to move higher? Or do we come up, test down, test lower, but phase out because we know we have the support there? Either way, I want to watch this and monitor it. What are the internals telling us? The NASDAQ is still in its range. The Russell has come off somewhat. Right? Russell has come off somewhat. Now, if you're in a short trade, you have your risk marker. You have your 86 to 90 risk marker. Again, and then you're monitoring for continuation. Look, it's coming, it's reclaim. It reclaimed that pretty strong. So that resistance area, what was support, did not hold as resistance, or has not held as resistance. We could just be probing higher. Testing those moving averages. I almost like it better higher because it gets me even closer to my exit. Okay, looks like we got some news. Whoa, yep. Shit. I did execute it. Hang on a second. I got in at 84. It's moving really quickly. I'm taking 18 on one, plus 18 points on one. Plus 18 on one. I sold it on the way down at 84 and 86. Coming right back down again. Is there news out? Bumping our head into this support again. I want to see some extension here. I want to get some extension. Also want to have my target in. Want to have a target in because with news volatility, if the news spike takes me out and it takes me out for 20 points, so be it. Price is spiking. Checking, I'm going back to the blueprint. I want to see, did I run into a support? Did I run into my lower support here? One eye on the order flow, and my support was my next support down was 75.53. And we traded a low of 75.61. So I hope you guys see how I'm always constantly referencing that trade plan. All right. So I sold 84s and 86s. All right. I got 18 points on the first. I'm looking for not yet. I'm looking for 66. I'm looking for 66 on the second. If I can get it. Doesn't look like I'm going to get it. It looks like we're moving higher. Now I'm looking at as you can see, I'm a little bit delayed in this platform, but I'm looking at the structure here, and we just put in a high pivot. We tested that 9-period moving average, and it's holding thus far as minor resistance. And we put in that high pivot at 75.78. My stops at break even at 86. All right, I really don't want to see it get above there, not by much. See if it holds here. If not, I'm heading for the exits. All right, it just popped again. All right, wait for this to settle down here a little bit. Okay, so we just traded back to yesterday's low, 75.81. And on the first touch, it's acting as resistance. It's minor, it's micro, but just stay alert here. I'm locked in on my, yeah, okay. Hang tight, team. I have to grab something really quickly. Hey guys, I'm back. Sorry about that. I got, all right, looks like I got stopped out. All right, so I got 18 points on the first. Oh no. So now we're back above the overnight high. Overnight low, sorry. Hang tight, be right back. Gosh, I was so thirsty. I could hardly talk. I didn't have anything to drink here. I don't like the way the low is formed. I think we revisit it at some point. We're also in the tail end of our high window. Okay, so still looking for high pivots. All right, we're not in the window for our low. I think the better scalps come to the downside for the time being. So I want to position myself in that direction. Looking at a 84.5 as our risk marker. And that would be this pivot high here at 84.5. We don't, if you're in any trade, you want to see continuation. And the idea there is lower high, lower high, lower highs. Okay. So we have 80 quarter short, looking for 74.75 for a 5-point fill. 83 84 quarter becomes our risk marker. Staying super flexible and super dynamic, just trying to move with the market, right? Just listening to what it's saying, gauging its intentions and moving with it. All right, got that fill. So plus 5 points on that one. All right, got 5 points on the first. Plus 5 points on the first one. Little color for the peak. And let's just monitor here. Okay. So I'm basing a lot of, you can see my first question to myself is always, do I have an area? Is this an area where I can do business? I don't want to diddle in the middle, right? So that would be step one. Now, incorporating frequently, you'll hear me talk and use order flow. Okay. A little bit more color on that in just a moment. Let me just make sure I have covers in, because the market is moving around quite a bit. So I want to be cautious in this environment. I'm going to be good. I want to make sure I get those profit takes out. So if I had to put it into steps, it's, do I have an area would be step one. Step two is, what is the order flow telling me about this area? So in step one, do I have an area? Am I at a support or am I at a resistance? What is the underlying, what is the higher time frame trend? What is the day time frame trend? Am I within value? Am I below the overnight high? Or am I am I above the overnight high? Where's price in relation to the overnight range? Okay, so am I trading within value or outside of value? Then, do I have a support or do I have a resistance? Then at that point, if I'm at an area, I'm looking at the order flow. What is price telling me? What is the order flow telling me at this area? Is there aggressive selling at my support that's going to cause my support to fail? Is there absorption at the support that would lead to that support holding? Market is a little bit jumpy here. Just give me a second. I'll just get back to that lesson in just a moment. I want to make sure I lock in. And tighten up a little bit, just because this ad is just in a really, really bad area. The market was moving quick, and I got a poor fill. But I'm willing to take I got +5 on the first. I'm willing to break even on the second. I'm okay with that, in the hopes that I can catch a better move. Again, my trade plan and my trade style is always about trading less, getting into a position and try to hold it for as long as I can. So do I have an area? And then once I'm at that area, what is the order flow telling me about this area? Is it a support? If they're aggressive selling into the support, is that aggressive selling being absorbed? If it's being absorbed, then I want to start looking for delta divergence. What is the delta doing? What is the delta doing at my area? So location first, always, then order flow second. And then I want to look at, is the market responding? This is where a lot of traders fail. Is the market responding at my area? Am I seeing 500 contracts at this area, or am I seeing 5,000 contracts at this area? Now, if there's 5,000 contracts and we're trading into a support and the price is not moving, That's going to signal absorption. When I locked in on the order flow team. So think of it this way. I'm not trading the order flow specifically, but I'm trading the market's response. I'm responding to that order flow. What is the story? What is the picture that the order flow is painting for me? And then I'm waiting and I'm sniping at opportune times, right? Once I have a narrative, once I see that sellers are being absorbed at a support, then I'm looking for those sellers to try an aggressive push, and I'm looking to buy into that aggressive push. And then the next step would be, is it confirming? Like, is my thesis correct? Am I on the right side of the trade? And we always know it if we're on the right side or the wrong side. You can kind of feel it in our guts. If you've been doing this long enough, develop that sense. You don't fight it. Listen to your intuition. Use it to your advantage. So here, immediately at this support area, right, I'm already starting to sense that while we are moving lower, while we do have a lower high, my position at 75.79 is not a great one. It's threatened because the nature of the entry that's the price that I have, right? So I'm not positioned correctly. So immediately I'm moving to break even. I'm willing to either take a few points on the trade, or I'm willing to hold on to it in the hopes that maybe it doesn't return to my entry and I catch a runner. So again, the next step is, when I'm at an area, is it confirming or rejecting my thesis? And then I'm trying to listen to that very carefully and absorb and process that information. Let's say we're at a support level and I see positive delta and absorption. Great, that's confirming my thesis. But if I see the support level, heavy selling, acceptance lower, now my thesis is wrong. So order flow should help you make a decision, not justify one that you've already made. And the final cog in that wheel is always like, where is my risk, right? So where is my risk? Where am I wrong? I know my area. I have my order flow. I'm locked in. I have the confirmation. Now, where am I wrong? Where does my argument fail? Where does structure fail? And where's my position in relation to the market structure? And then what's my reward relative to that risk, right? So right now I have no risk in this trade, and I'm willing to expand the reward. Trade optimization, right? I'm trying to get the most I can out of this one position. And whether that's, I've already made 5 points. I made in this one, I've made 18 points and 5 points. So I'm up 23 points in this account. And so I'm willing to hold on to this contract to see if I can get some extension, with the understanding that after this, I'm likely done in this one anyhow. So let's see, maybe I catch a runner. And often I've seen these positions pan out really great. And then, but most times they stop out at break even. And I'm fine with that. I just try to stay consistent in your approach. Because then you have a system, then you're trading a process. So, a quick summary is, do I have an area? Step one, do I have an area? And the next step is, what is the order flow telling me? Then next you would be thinking about, is price responding to this, to what the order flow is telling me? Is price responding, is confirming my read? Does it confirm or contradict my thesis? I'm not arguing with it. If I'm wrong, I want to know it fast, and I want to get out of the way quickly. Accept it, move on. There's always another trade. And then the last step is, okay, where am I wrong? What is my risk? Where am I wrong? How can I minimize that? Clip that. A lot of these concepts are the ones that I'm discussing when I'm working with Jesus and a couple of the other guys on this, in the lunchtime afternoon hour, just trying to hammer this kind of thinking in, to have a really structured approach, to have an ABCD logic chain that you can build out and that you can execute in seconds and make that good decision. Then you go back and you check those decisions, you check that logic chain, where did it fail? And then you practice getting better at making those decisions. Do I have an area? What is the order flow telling me? Is the order flow confirming or contradicting my thesis? Where's my risk? Where am I wrong? Pull the trigger. And then we drill that, and we drill it, and we drill it, and we drill it, and we exercise it so that you're making that decision within within 30 seconds, really quickly. Some areas require a little bit more time as the evidence unfolds. Other times, we have to make really quick decisions. Unfortunately, we do not get to dictate that. The market does. And in any event, if we can't make a good logic chain decision, then the best bet is to sit out and practice it, drill it, get better at it. Kobe Bryant used to shoot 500 free throws, and he was a great free throw shooter. He just worked on his craft. He practiced it. He had this system set up so that he could practice the right moves for that. So on game day, he would go in there and execute, and he made it look easy. But that was because that guy was putting in the most work. A lot of traders that I speak to, they're coming in, and unfortunately, because this trading has a low barrier to entry, right? There isn't a lot of a structured approach in how to. Most of what's out there is just basically technical analysis and linear thinking, black and white. If you get this, then do that. But the trading is both science and art, and the art comes in and when you start to blend those with a quick thinking process, forming good logic chains and executing quickly. That's where you can start moving on to mastery. Again, at that point, then it just becomes you have a career, and it becomes okay. What is the market offering? You're managing the risk. You're executing. Obviously, trading is about the wins and the losses. You're going to. It's not an ATM like most people who get into it think. No, you're going to have even with the best win rate, you're going to have your losses. So what is your contract size? What is your risk? What are your risk parameters? What is your win rate? What is your average win? What is your average loss? And then you have your business has its income projection. And then you can start working on trade optimization, right? Limiting those. We start digging into statistics like, what is my MFE? What is my maximum favorable excursion? Okay. What is my MAE? What is my maximum adverse excursion? So when I get into a trade, what is the most that my winning trades are going in my direction? And what am I getting out of my average trade? So if your maximum favorable excursion is 10 points, but your average win trade is 4 points, then we have to start tightening that up. If your maximum adverse excursion is 5 points, so the maximum a trade goes against you is 5 points, but you're using a 3-point stop, then we have to work on that. If your maximum adverse excursion is 5 points, but your average winner is only 3 points, then we need to relook at the data, relook at the system, tighten up the screws, and optimize it. All right, so we just came back down into 75.68. Let's get a read here. I'm going to do as I do most of the time. I'm going to just look at my blueprint. Okay. Price is seeming to grind down lower, but it's not really getting that extension that I was looking for. I'm not quite at a support yet. For me, the next area that I'm looking at is 75.53 to 55. So can I get down there? Perhaps. Above me, what do I have? I have 75.73. So I'm in that area now, and I certainly haven't converted it yet, right? I've only gotten one close below it, or yeah, one close. We closed and opened and came right back above it. So this area could, think about how this day might end. And if 75, if our support is 75.83, which is right in this zone, no, hang tight. So my support is right in this zone here. At the end of the day, if price came down here, and this would be a look below and fail, or look below and reclaim, right? We're still that's still threatening. That's still a possibility here, especially with the structure that we see building out. I'm in the window now for 11:15. So okay, so with that evidence, right, the way I'm thinking about it, I have my logic chain going. Now I know that my entry 75.79. I'm going to start thinking and plotting my exit, right? If I get a spike down and it stalls, I'm out. If it starts to move, if I'm looking at, now I'm shifting to the order flow, I'm coming back into it. We're coming back up hard. I'm just going to go ahead and close this one out. And when I get this close, I'd rather just let the stop work. Yeah, it's going to stop out break even anyhow. All right, so that's it. That's the exit on that one. So I got +5 on the first, and then price failed to extend lower. Unfortunately, I was within the middle of a lesson, and I was not able to. I would have, you guys heard how I framed it. On this push lower, if I was completely focused on the trade, I would have locked in and likely maybe I'd take an exit on the way coming out. Not sure. Can't say. Not going to Monday morning quarterback it. I was willing to hold the trade to break even. I was satisfied with that result. I've made 23 points in that account, so I'm pretty good there on the day. Don't feel like I need to continue to press it. Done pretty good on the day. I don't want to. Now I have to start thinking about, MannyTradingBusiness.com, and I have to start thinking about, okay, what do I want to risk? How have I done for the morning session? I want to make sure I secure those payouts. I want to make sure that I get those funded accounts to pay out. Like for that, for instance, that account just reached the payout criteria, so I certainly don't want to risk that one. The earlier account hit a payout, hit the payout criteria, so that's 2 of them. The one that I took the loss on, that would be the account that I would shift my attention to on any next potential setup. So that's how I'm managing the account risk. Thanks, Bruce. Appreciate the support. Let me know if you guys have any questions on any of the topics discussed today. Again, if you do have any questions, if you're in a trade, manage that. Make sure you stay on top of that. But if you do have any questions, just shoot them out. I know that it probably would not only help yourself, but it would also help me and maybe help someone else in the room. Never be afraid to ask questions. That's how we all help each other. That's how we all get better. Remember, we're all retail traders, right? We're all retail traders. It's us against them. Let's make sure we keep a good core, strong team so that we are setting the odds as best we can in our favor. I love it when I see, I've seen guys, I've seen traders posting like Discords or even other sifter chats to this one, and they'll say, oh, they'll speak in this pejorative way of retail traders, right? And they're they're a retail trader also. I'm like, hey, you're on this team, so yeah, you're on our side, if whether you know it or like it or not. There was often a time where traders would like say, oh, I'm not a retail trader. I think we're all retail traders. When I worked at Bloomberg, I worked for non-retail traders. Trust me, we are all retail traders. even guys, even traders working at hedge funds are retail traders. All right, they are not institutional traders. They are not trading limitless accounts for JP Morgan. They're not trading limitless accounts for Merrill Lynch. They're not trading accounts that have literally no bottom for Credit Suisse, First Boston. Where the numbers are so big, it's just all percentages. Imagine that, right? Well, it happened. Those traders are not trading for that. They're trading the bank's money. And they have the best tools. They have in-house mindset help. It's just all available to them. The resources are vast. So one of our core strengths here within our community, and where next week we have a really powerful schedule coming out. Was actually sidebarring about that this morning with David Dubay from PTG, and because we have so many different talented traders, and many of them, like for instance, Danny will be on today, delivering her mindset stuff. Bo is typically on, but he's had some personal obligations, but we're going to really lock down the schedule because there is so many different aspects to trading. And we have so much talent within our community. It's truly untouched so far. I think if I would have to say, you guys have probably seen maybe 20-25% of it. So for instance, like there are Danny's really great with mindset. David from PTG is probably one of the best educators that I've seen. His teaching modality is by far one of the best I've seen, and that's a difference between like a teacher and a coach. Like I think I'm more of a coach. Like an educator teaches information, where a coach develops. You all know I'm a baseball coach, and there's a difference between there's a difference between a coach and a trainer. The trainer is training your body and training your movements, where a coach is coaching the entire player. An educator can tell you what to do. A coach helps you do it consistently. Um, an educator, an educator teaches everyone the same lesson. A coach is trying to help you solve a specific performance. He's trying to tweak your performance. He's identifying what your performance leaks might be, and he's helping you to teach that once you already have the understanding and a basic knowledge of the information. You know, an educator would tell you, okay, here's how a look below and fail works. And then, you know, a coach would be like, all right, you've seen the setup 20 times. Show me how you're trading it. Let's diagnose how you're executing it. Now let's work on the execution. Information creates knowledge and understanding. And then you have to, because if trading is a lot like of a performance endeavor, you know, coaching creates change within your behavior and your execution. If every trader could simply, you know, this is something I tell people often, is if any trader could turn on and watch a trading video on YouTube and hit the mark every time, then there would be a lot more a lot more successful traders. And one of the reasons why, you know, the fact that the point that a lot of people overlook is the personal component, right? That requires someone to look at your personal execution, your personal performance. And I understand fully that could be, you know, the longer you trade by yourself, isolated by yourself, there's a highly personal, highly private component to it. And the longer you stay in that private, echo chamber, likely the longer it's going to be to overcome your challenges. Manny, have graduated from YouTube. Funny. 11:15, 11:30 low. Yeah, so that's what we're looking for now. We're in that window now. Again, so I was kind of pointing that out earlier, that we're in that window, and this is the look that that's an excellent observation, Adrian. Yeah, and welcome to the pit. Thanks for joining us. Again, so what Adrian is pointing out is, circling back, because I was in the lesson of, you know, the different teaching modality, the different approaches to trading. But so we're going back. Let's just circle back to the market real quick, right? So we know per the market blueprint, we have a support at 75.73 to 75.75. Okay, it's a band. All right. So we're in this area. We have a support. Thus far, prices dipped on the news dip. We've come below, and now we've reclaimed it. So we traded below, and now we're trading back above it. We're trading back above support. Okay, so that's the price action. That's the structure. Now let's take a look at time. Are we in the window for a low? We're anticipating a low between 11 and 11:45. All right. So now we can start looking at, hey, we didn't get jumpy on this short, and if we did, we managed it accordingly. We didn't let it get carried away. I was in that short. I got stopped out. Stand aside. All right, but now let's circle back to the plan. So now in the plan, we know we have a support. We've tested below it. We reclaimed it. Price is now reclaimed the support, and we're at a low window. So for me, I'm going to start considering, okay, what's my next step? So as I was just saying, so now I'm going to flip over to the order flow, right? I want to start looking at the order flow. I don't want to always look at it all day. I don't want to get, I don't want, there's a certain, you can develop a certain blindness to it if you're looking at every area of order flow. Look at the order flow when you get to your areas or at certain times. Okay, so now I'm looking at my order flow. Now I'm going to start dialing on the order flow. I want to start building a feel for what's going on here, right? So I want to start looking at so right now we're just consolidating just below yesterday, the overnight low, 75.81. And now I want to see on dips lower that go below my 75.73, what's happening? Are we starting to wick? Because I know that the last time we came down here on this print, right, it was the first print that we printed below. Let me just clear this out so I can really focus on this lesson. So look at what's happened, right? Let's just walk through. Let's just build a logic chain. Let's develop. Let's craft a story. So we had the news blip down, right? It left a pretty big buying tail. Okay. This is our support area. So we reclaimed it and closed back above it. We had one low. We came back below. Price immediately opened and came right back above it. They pushed it lower, one more try, and then we opened and now we reclaimed it. Now we're back above it. All right, so kind of like building the argument, right? All right, so now it's starting to look like, to me, like buyers are absorbing those dips, right? Sellers are pushing lower, and sellers are dominant today. Make no mistake, right? We have to be mindful of that. Here's our support. Here's our idea. Looking for something like that. Okay. So understanding, respecting that the trend is down. Is there a scalp trade that can get us into what? Into our resistance point, maybe get us up to the volume weighted average price, maybe get us up into our day time frame reference of the volume point of control. So those become our target areas so that we can start framing, is this trade worth it? If there enough room to target that justifies entering the trade. Okay, so next thing I'm going to be looking at is the order flow. On dips, I'm not going to long it here, right? That doesn't make much sense. So I have to wait. I have to watch. If I get a dip down here, what does that start to look like? What is that dip telling me? Do we dip down? Oh, let me just get the support. Okay. Let me get the idea. All right. So now we understand what happened. We dipped below, we wicked, we pushed lower, it reclaimed. Now, what am I looking at? Now I'm considering a long trade, long scalp, because I'm against the day time frame trend, right? So I know that my targets become up here, 75.88, 75.95 ultimate, okay? So now I'm looking for, if price comes down into my support zone for a retest, I'm expecting buyers to show up. And I'm looking for, oh, critters. All right, so this is my idea. We understand what has happened so far. This is my need, right? We want to see price get up here, but we can already see that it's been testing up here quite a bit. Okay. So now if price comes back down into this low, do I get a print like this? and then a follow through? Or if I get this print, do I get the next print down here? Or do we print into this low and we close below with a long wick? Now I'm monitoring for that structure, right? Now I want to see how this forms. Do I get this look on the left? And if I do, I'm looking to enter on the close of this bar, and here's my risk. If I get this look subsequently, I'm out. If I get this look, I'm looking for the target of the VWAP, okay? You can see we're reaching it right now. So the trade is pretty much at its target. I can't entertain a long trade from here, but I hope that frames out the idea of how we're going to try to build a logic chain, and we're going to think through the trade idea in the hopes of how we want to think about entering a trade. And then this kind of concept is the one that we want to drill over and over and over and over and over and over again, so that we're making this decision process inside of 30 seconds, maybe even less. I mean, eventually, once you hit mastery, it's just second nature. Did that help? Let me know if you have any questions about that. Hopefully everyone has plenty of questions and helps everybody out, but if not, that's all right. Don't worry about it. It's all right. Don't worry about it. I know you're probably managing a trade, and that's the important part, right? All of this is about making more money, making sure that you manage those trades well. That's all that really matters. We're testing VWAP, right? So again, let's start building out the logic chain again, right? We have our 11, we have our low. We're looking at our next pivot as a high into 1230. Now I'm going back to my logic, though, 12 to 1 o'clock high. I'm not in a window where I can execute a long trade, not yet. I'm in a window where I can execute a long trade, but I don't have an area. Going back to price is everything, right? We're going to monitor price is everything. So looking at areas, I'm back above. I'm approaching my continuation long area, and I am above my support zone. So I'm kind of in limbo between a continuation long and a support area. What is a valid trade for me is to enter a long trade within, say, the next 30 to 40 minutes. If I get a pullback, then I can get into a long. Looking to, see, this is where nuance and experience comes into, because I would want this, like, I'm less inclined to trade this long now because I wanted to be in it on this move. So again, this is where, like, you don't have to take every trade. You can sit this one out if you know, because there'll be another one. There'll just be another one. Take a better one. But what I can do, and if you are looking for a trade, and if you're applying this logic chain and this kind of systematic thinking, then what we're looking for is, already got the up move. Now we want to see price come back down for an entry and hopefully a test up to volume point of control. If not, we want to be in a long. We want to be taking most of our scales out into this prior high, into what could be this high, right? We want to be exiting here. We want to be taking our scales out in here. We want to be getting in around here and setting our risk somewhere down here where we're wrong, right? Because where we are wrong on this trade is if, instead of it bouncing, if it just continues to trade lower. At this point, if it gets below here, we're out. We take a graceful exit. We don't want to be a part of that. What? I left. Oh, hang on. Let me know if you have any questions about that. With 11:30:17, we're coming in. I ran a little bit over on that last piece, but just a quick reminder, Danny's coming up at noon with markets and mindset, so stay tuned for that. Danny's always got such great stuff. I'm not sure how much you guys are, if you guys have listened to it or watched it at all, but as much as I can. I missed a majority of the last one because I was busy with something else, but Danny brings this really great holistic approach, holistic perspective to mental health in trading and a way to optimize that mental health, right? And brings this really, really good wellness component to trading, right? Because again, let's be mindful of how much duress we are actually going through on a daily basis. I mean, trading is stressful. It's a huge stressor on the brain, on the emotions, on our psyche. How many of you have ever been trading and tell me if it's happened to you, where at the end of the day you're kind of like you kind of zoned out. You're just kind of like in this fog, so to say. And that, I'm not sure about you guys, but it's happened to me. So we have to remember that in trading, decision fatigue is real. It happens. The brain is not optimized to make that many decisions. Your brain is tired whether you realize it or not. Mental fatigue, that's how tilt happens. It's always on the heels of mental fatigue. Think about it. It always comes after a moment of stress. Mental fatigue doesn't show up as exhaustion. It shows up as poor decisions. Even on a winning day, you could feel the same mental fog. Your brain is processing risk. It's processing emotion. It's processing adrenaline. It's processing decision making. And then think about it. The market doesn't care whether you made money or lost money. It's still moving at its normal pace, and one pace with it. And most times when we say, all right, you know what, let me just make this one. How many times has it happened to you? You're like, let me just make this one more trade setup. And it's not because you're no longer sharp. It's just because you're trading with a mentally depleted mindset. You have to think about recovery. Professional athletes recover. Professional traders should too. And you can walk, exercise, hydrate, stay away from the screens. But Danny has an excellent, really in-depth approach to different ways and different modalities on how to maintain that mental with the next day with a clear mind. So make sure you tune into when she's talking about, just at least that's what I'm listening for, is how to clear my mind, how to stay balanced, how to have a healthy mindset. A lot of traders, think that they're running out of good trades, and really, in reality, they're just running out of mental. How often doesn't it happen that you're running out of mental capital? Yeah, welcome to the pit, Adrian. Nice to see you in here. I think I said that already, but it's nice to see you. Glad you used the link. So remember, keep that on your calendar. Danny's coming up at noon. And then she's going to take us from about noon to maybe about 1 o'clock. And then we have FOMC at 2 o'clock. Get ready for the fireworks, guys. Get ready for the fireworks. It's going to be awesome. It's always, grab your popcorn. If you're trading, then make sure you have those knee pads on. Make sure you put on those elbow pads. Make sure you put on your helmet, because it's going to be crazy. It's going to be exciting. And if you are trading during the FOMC, remember, trade smaller, switch to the micro if you're trading minis. Your normal size may suddenly feel like twice as large. FOMC is one of the few days where less size can make more money. Right? You have the expanded ranges. You can get 2 micros and make good money on it. Don't chase the first move. First move is often wrong. Market frequently explores in one direction and then another before it finds its real direction. Reaction beats anything else on that day. All right. Know your levels also before the announcement. Have an idea of where you want to do business because the price will be moving fast. Know your supports, know your resistances, know your key acceptance and rejection areas. Preparation creates confidence. Trust me on that one. And remember, we don't ever have to be first. You don't get paid for being first. You get paid for managing that risk and being right. Watch for acceptance, watch for rejection, watch for failed breakouts, watch for failed breakdowns. Most of all, protect your capital. And protect your mental capital. If you miss it, you miss it. There'll be another opportunity. I mean, we're grinding out trades here all week long. There'll be another opportunity. The worst days I've had on FOMC has usually become when I'm forcing action, when I'm like trying to make myself feel better about a bad decision. And I often tell players that I coach, don't let one bad play turn into a bad game. And trading is no different. Missing a trade is cheaper than chasing one. Trust. I'm sure we all know that, but just make sure you grind it into your head. Talk about it with a friend. Get into it, right? Have these discussions like, yeah, dude, or yeah, I'm not going to do this, or I'm not going to do that. I did this the last time, and here's what I'm trying to get better. I'm trying to improve. All right, man. If I do make that mistake, I'm going to call you out on it. Have somebody like that in your orbit that you can share those conversations with. And if you need somebody, give me a call. I think most importantly, today shouldn't be about today shouldn't be about being a hero. Today is about surviving the volatility. I'm as I said, I have one account that I would like to see go green today. I rarely trade more than 4 accounts, and I'm at that 4 limit now. I have 3. I have 2 green, 1 flat, and one that's red. The 2 green are at payouts. I'm not touching those. And then the one that's red, maybe I might do something there if it presents, but no, not. It's only Wednesday. Still got tomorrow. Still have tomorrow. Adrian said, I have the secondary low at 11.12 on a 3-minute chart, exactly like your clock stated, Manny. Yeah, we got the low pretty good. I was distracted, but I should have seen it on this rip, right? As I said, this is a pattern, team. Look at this pattern, study this, right? When we don't ever have to be first, but we got the move lower. We wicked, right? Let me just clear this out and expand it so we can see it a little bit more clearly. I see this so often. Learn this pattern, right? Because the market moves in these patterns over and over again. So we came down, we made this wick here. Subsequently, look what happened. Right? We reclaimed it. Price was about to follow through, but it's consolidating. These sellers here tried to push price lower. They tried to push it lower here. They thought they had some follow through. They thought they had some follow through here, but right here, when they couldn't get this follow through on this close, this bar was really fast. I remember it. And if you're using that third step, you're getting into the order flow. Right there, if you're short, tighten up or get out. I think I got stopped out on that. but the failure to extend lower, if we were really bearish, we would have been printing down here. We should have seen a print like this. You know, we should have seen a print way, way lower, but we didn't see that. Right? We should have gotten, even if this one came higher right here, we should have gotten the next print lower, and we should have started seeing some follow through lower. That didn't happen. Oops. All right, team. So that's going to wrap it up for me for today. I'm going to remember, keep in mind, I wanted to segue into Danny. She's coming on in 10 minutes. So that gives everyone the time to grab something to drink. Don't go too far. Refresh your, go out, stretch your legs, be back. Thanks everybody for your support. Appreciate the support. If you got anything out of this at all, drop a comment. If you have any suggestions, please shoot me a DM. Appreciate everybody's support. We'll be back at it again tomorrow.